Hi, I'm Patu from freefincal, and in this video, I want to talk about how you can quickly filter bad bank stocks. I'm so tired of people asking, "Can I buy S Bank at this level, that level, and so on?" As if it's some kind of value opportunity. It's not. It's a shit stock rejected by the market. Just because something is available cheap does not make it good. So you should have a simple, quick method to filter bad stocks, and this is with respect to banking stocks. So what I've done is I've gone to ticker tape. This is a paid stock screener. It's quite inexpensive, and I've sorted the private banks in terms of their price momentum rank. So the price momentum rank, the lower the rank, that means the price has not moved up over the last year. Obviously, for S Bank, Karur Vysya Bank, Karnataka Bank, South Indian Bank, and so on, they have not moved up in the last year. So clearly, the price momentum rank is the lowest. And if you start with S Bank, if you notice, so let me just close some windows because it's a very heavy. Uh, I'm capable of crashing any machine, even a Mac. So let me just close this. That will free up some of my RAM. Yeah. Okay. Okay. So let me do that. And now look at the S Bank share price. Now, a fall from 400, almost 400 rupees to 40 rupees is a very, very big fall. That is not a value buy. That is not a buying opportunity. That's just a market rejecting a bad company, right? Just even if you don't bother looking at the news of what is wrong and why this is falling, this is good enough to reject the stock. So let me get rid of this window too, and that will hopefully make things a little bit easier. Now look at the promoter, the shareholding pattern. Look at the amount of pledged shares. The promoters have pledged their shares from 3.63%, it's 40% in August 2019. That's just terrible. That's the reason why it's kept falling down. And okay, there's some good news about it today, but that still doesn't mean it's the bank is out of trouble. And the bank will always say everything is all right and so on. But clearly, if the promoters are pledging their shares, something is wrong in the management. And so let me get rid of this as well. And if you look at if you go to the balance sheet, and if you look at the gross non-performing assets, look at that. It's gone from 2,000 crores to 7,000 crores over the last 3 years. The gross NPA as a percentage is also gone up. The net NPA is gross NPA minus the provisions for handling those losses. That has also gone from 1 to 2% and so on. So that's a problem. You don't want to touch a bank where the net NPA to advances is actually increasing. That is, the net NPA is effective non-performing assets divided by the loans given by the bank, and that is essentially increased recently, and that means that the bank, the bank is having trouble with these non-performing assets. The business model is in trouble, so you don't touch such stocks. Simple as that. So that's that. Let me get rid of this as well. Next, we go to Karur Vysya Bank. The pattern will be the same. Again, Karur Vysya Bank, look at that fall. Last 2 years, this has been the fall. Again, that means there's something wrong with the bank. If you go back, close that window as well. Again, look at the shareholding pattern of Karur Vysya Bank. Look at that. That's huge. Even September 2018, the pledge shares are very high. You don't buy a bank with that much of that percentage of pledge shares. That's just not good enough. And if you go to the Karur Vysya Bank financials, you can see the net NPA to advances again has increased over the years. So this is the net NPA is effective non-performing assets after accounting for the provisions for them, divided by the total loans given. So that's been increasing. So again, the bank is having problem with bad loans. Don't buy the stock. There's a simple, clear pattern to all this. We just need to look at what the market is doing. This is Karnataka Bank. Again, the bank share has been quite in the doldrums for quite a long time, for a very, very long time, I would say. I have not. Oh, I forgot. What did I do? I forgot about. I forgot the financials for Karnataka Bank. But okay, let's move on to South Indian Bank. The South Indian Bank also has a similar problem. Right from somewhere in the middle of 2017, it's been falling. What did I do? I'm missing some banks here. Right? Oh, some windows have crashed. South Indian Bank also has a similar problem. If you go back and look at the NPAs, it will have a similar issue. This is the next is IndusInd Bank. Let me just close that as well. Again, IndusInd Bank, or you can see here from 2018, it's been falling down. If you look at the uh, shareholding pattern of IndusInd Bank, I hope this is this is IndusInd Bank. The pledged shares are quite high. That's bad. You don't touch it. Get rid of it. Let me just close this as well. Close that as well. Look at the financials here. Whoops, whoops. Whoa, 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 whoa. Sorry, my Mac is getting old, or I'm getting old, or whatever. The net NPA to advances for the past 4 years, or actually is increased over the past from 2000 March 2017 to 2018, it has increased by 1%, and it has been there. It has been there by 1% for the last couple of years, and that's not a good sign. That's not a healthy stock to buy. So again, you can see the trend here. It's quite easy to filter out such bad stocks. It won't take you too long to filter out. All you need is you need to have a notebook, just note down. And this is Kotak Mahindra Bank. You can see that the stock has nicely moved up. It's got a high momentum. So I'm now on the other end. I was talking about low momentum stocks, low momentum banking stocks, and why they have low momentum. They have low momentum because the pledged shareholding is high. The NPA book is increasing. And on the other end, if you see the good banking stocks, if you see Kotak Mahindra Bank, that's been moving up. And if you look at the pledge shareholding for Kotak Mahindra Bank, it's 0. Get rid of that. And if you see the net NPA to advances has actually been the same, but actually it seems to have. If you see the gross NPA here, if you look at the gross NPA here, it's not changed much. It's only a marginal increase. That's quite all right. That's quite all right. And if you see the gross NPA percentage, it's actually gone from 3 to 2%. So it's actually dropped down a little bit. So it's okay. I mean, it's not as this also has NPAs, but it's not gone. It's not spiraling out of control. That's good enough. And the market likes that. They don't. At least they've not gone into the level of pledging their shares and so on. So the market likes that. Now, if you go to ICICI Bank here, again that looks good. The price is all right. Fairly, if you go to the pledge shareholding, no pledge shareholding for ICICI Bank. I mean, expert stockholders among you watching this will laugh at the way I'm doing it, but I mean, the way I see it, I'm not a great expert in anything, especially stocks. But for me, it's common sense. If the fundamental business of the bank is not doing well, then don't touch it. And you can see here, the gross NPA of ICICI Bank has actually dropped from 10% to 7%, and that's a very good sign. And the net NPA to advances has actually dropped, and therefore the market rewards that share, right? I mean, market likes that share. The share price goes up, and it's the company is valued more, right? That's what I mean. So that's the pattern. It's so simple to do it. We just fail to follow these basics and keep asking here and there. Can I buy at this level? Can I buy at that level? Oh, come on. I mean, I'm so sorry to say this. I mean, call me arrogant if you will, but if the number of morons investing in mutual fund is like 100, the number of morons investing in direct equity seems to be 10 lakhs. I'm sorry. So again, if you look at that, no pledge shareholdings for HDFC Bank, and if you look at the net NPA to advances, it's been fairly okay. The gross NPA levels have increased, but it seems all right. The gross NPA percentage has been constant, and it seems to have more or less, a net NPA to advances is more or less low. The money control has some weird, it shows some March 19th twice. I don't know why it does that, but it's fine. I mean, it's quite nothing to worry too much about with respect to HDFC Bank. So so that's what I wanted to say. These are simple ways to quickly pick bank stocks. That's my son checking if I'm still doing the video. So that there's a simple ways to quickly check if X bank stock is better or not. I would suggest you do this, dig deeper, have a list, have a table, have a diary, list it down, have a short list, and then buy. Look for momentum, look for low volatility. The